Alistair, from your 5th of July Substack report, you talked about the gold and silver moving averages. Describe to our audience what these can tell you. Then, could you expand on a comment you made, and I quote, "Fiat currency era is coming to an end."
Moving averages are a very useful way of filtering out, if you like, the often misleading day-to-day moves in whether it's a commodity or a stock price or a bond price or whatever. And commonly, technical analysts will use two moving averages, one a shorter term and the other a longer term. The longer term one will give you, if you like, a sort of a general feeling whether you're in a bull market or a bear market. The shorter one will give you more timing, perhaps. Now, there's been a lot of development on moving averages with different technical analysts weighting them for, giving a higher weight to more recent numbers coming in and lower weighting to the more historic numbers, say. But the plain, simple moving average is quite useful. And where it is particularly useful is that when you get one crossing the other, then this indicates that there is a change in trend. Putting it more specifically, what's called a golden cross, which is a bullish development, is when you get the price above the moving averages, you get the short-term moving average moving up, crossing over the longer-term moving average, which itself is at least turning positive. That's known as a golden cross, and it can be quite a powerful indicator about the prospects for a market. The reverse of that is called a death cross. In other words, in a bear market situation, when you get the price below the moving averages and you get the shorter term moving average crossing down over the longer term moving average, with both those averages going into decline, then you have a death cross. Interestingly, that is precisely the position we have in the dollar's trade-weighted index. And the dollar's trade-weighted index has fallen since that death cross from around about 100 down to the current level of 97. And it looks like it is going to go considerably lower. On the other hand, if you look at silver, you have a golden cross whereby the silver price is above the moving averages. Both the moving averages are moving up and they're in the right formation. So you're looking at something which is immensely positive. In the case of gold, again, you have got a bullish development. The golden cross, if you like, was a long way behind. And we now have a certain amount of air, let us say, between the price and the longer term moving average. Some analysts, who are very often naturally cautious, would say that you need to have the longer term moving average catching up with the gold price. In other words, more consolidation in gold is to be expected. Now, whether that happens or not, we will see. I personally prefer to follow the political and economic developments undermining the dollar. I take the view that it is less a question of gold going up and therefore gold being in a so-called bull market, and more a question of the collapse of the fiat currency. And I think if you can understand that, you get a better grasp of what is going on in gold and what the prospects are for the relationship between gold and dollars.
I'm glad you explained that, because up to now, I've always questioned my thoughts about it. So really, thank you very much, Alistair. And that second one was, fiat currency era is coming to an end.
The fiat currency era, I believe, is coming to an end. It started with the abandonment of the Bretton Woods system back in 1971. If you look at what has happened to the purchasing power of these currencies, ever since then, they have declined. And in the case of the dollar, When the dollar-gold relationship goes over 3,500, then the dollar will be worth precisely 1% of what it was in 1971. In other words, the dollar will have lost 99% of its purchasing power over the last 4 years. We haven't really noticed that. Of course, we know that inflation, prices have been rising, but people assume that prices are rising rather than the currency is falling. The currency falling is the big wake-up call, which people, I believe, are increasingly beginning to understand. And they're understanding this from the top down. The man in the street has got no idea. Central bankers know what's going on, which is why they are selling fiat currencies for real money in everybody's common law and in practice, and that is gold. We're finding that Chinese citizens, for example, who have a very high savings ratio, household savings in China are estimated to be 35% of income on average, and they're buying gold. People around Asia who have this, if you like, a closer affinity with gold and have been less exposed to the propaganda from the Americans that gold is a pet rock, the dollar has replaced it, they are buying gold. The people who so far have yet to wake up are the general public in the West. And by the West, I mean, obviously, Australia, I put you in part of that, Japan, also America in particular, who have led the propaganda against gold, and the Europeans. The Europeans are interesting because the Banca d'Italia and the French and Germany, their central bankers are big holders of gold. They keep very quiet about it. But you can see that, from the top down, these guys know that the whole thing was just propaganda. It's the rest of us who need to wake up and understand, actually, this is the end of the fiat currency era. And we will go back eventually to some form of sound money once fiat currencies have either been completely destroyed because governments are unable to respond to a situation which is spiraling out of their control, or they actually address the underlying issues in such a way that they can put their currencies back onto a gold standard.
To sum all that up, get your gold and silver now, don't I?